Good afternoon, good morning, good evening, everyone. It is the 18th of May, 2021. Happy Tuesday. Just did my kind of long-term Cardano review. Doing one on Bitcoin now. Really kind of give you an idea of what's happening, what to look for, and really kind of zoom out a little bit. Because when I look at things as a day trader, I'm looking at things on daily charts, 4-hour and 1-hour charts, and sometimes it's really easy to get caught up into the tunnel that is short-term trading. And it's a good idea every once in a while to take a look back. I do this at the end of every week and then extensively at the end of every month. But I want to spend a little bit of time here looking at Bitcoin, doing a really kind of longer term overview. Elliott wave analysis is kind of a recent buzzword that people like to use. And it's a theory that a lot of people like. Excuse me. I like it just because it provides a good idea of structure. If there's anything you take away from Elliott wave analysis, know that things move in at least waves of three. All right. But when you look at this chart, I'm not going to be too exact here. So this is the historical Bitcoin price index by TradingView, going back to the first amount of tradable data that we had back in the month of July of 2010, so 11 years ago. Starting at this low from here, little Elliotticians, probably see what's happening. And I don't know, some people might call that wick there. I'm whatever. You could consider it or not consider it, but there was our first complete, if you want to call it a super millennial wave. I don't care a lot about the names, but all you need to know is, in Elliott wave, there are moves inside of moves. So in an impulse wave, the corrective moves are inside on the moves lower. So if we're in a bullish impulse wave, our corrective waves are on waves 1 to 2 and 3 to 4. So here's a corrective wave. And then here was a corrective wave. All right. And then you had little impulse waves inside of you had 5 waves up in an impulse wave on the inside. Just being kind of sloppy there. So that brings us to the high in 2017. And we had a very clear, extended, drawn out, and violent, ugly corrective wave. And then we had a nice bounce in 2019 that lasted for about 6 months. Boom, boom. Brought us down here in 2020 to our COVID low. And now we are up somewhere around here where our third leg is ending. Where we go with the fourth, I don't know. Where we go with the fifth, we don't know. But we can project. All right. One of the rules is that in an impulse wave, the third leg is generally the longest, but it can't be the shortest. So this was our wave 1 that we saw that did not last very long, nor did it proportionally. It moved up a good amount, but historically it's not that big of a drive. So is this the top on the third leg? I don't know. That's where, you guessed it, Fibonacci extensions come into play. And I'm going to just use the closes of these levels. I don't want to use the wicks because those tend to mess things up quite a bit. Okay, so I just drew a whole bunch of fib extensions off of prior swings. There's like 23,000, 24,000. This was a pretty nice range to see where that resistance was at. There's a collection of extension levels there. And then we had our most recent one from our lows in 2019 to our high to our COVID low. And that brings us, we're looking at the $90,000 range. That's, you see the 100% extension, 786 and a 227. So the 100K range is where it looks like our third wave would logically kind of conclude. That psychologically, that's a good value area, 90 to 100K. All right. That's where you would likely see that occur. So let's just put a little band up there. You do all that work for you to look at a psychological number that says, oh yeah, 100,000, that's probably where it's going to face a lot of resistance. Just makes sense. So that's where we could see the third leg extend to. However, a third leg extension, if it's going to be the longest, if the third leg 2 to 3, if that impulse wave is going to be the longest, or at least not the shortest, I mean, we may even see it extend higher, but for right now, let's just assume that 100K range is where things top out. Now, there's not a ton of history for Bitcoin. I know that seems weird to say, but when you look at things like the stock market and commodities, you deal with things in where you have centuries of data, at least decades of data. But a lot of financial instruments around the globe have centuries worth of data, especially commodities. So Bitcoin is kind of hard to gauge what the average retracement is because we just don't have a whole ton of data. So let me just get rid of all of that stuff I drew because I want to put that back. So the 100,000 range, 90 to 100K, if that's where wave 3 is at, what we do want to know is if it faces resistance and it sells off, how far is it going to go? Where's it going to land? Well, that's where, again, fib retracements are very helpful. So from the prior high, this was the Mt. Gox high, this was in November of 2013. The strong bar of the move was back here. The market pulled back down to the 236. That's as far as it went. Then we look at the 2017. Strong bar of the move was actually, was it right here? Huh. Yeah, it was. And that market pulled down to the 618. Now we have this. And let's just assume 100K is the top. Strong bar of the move so far. Oh man, that's hard to tell. Sometimes you got to measure these. And when you're measuring strong bars, you're measuring the range, the high to the low. It might be that one. That'd be kind of annoying. Okay, it is. So this is the monthly chart. So it's the month of February. That's the strong bar of the move currently. So if we get up to 100K, our retracement might not exceed below 48K. That's what this is saying. That's the 618 retracement. I mean, you could say the 1618 would get tested, which I think would be, oh man, if it would pull back down to 16,000, 17,000, how thrilled would you be? By the way, look at the number there. I don't know if you can see this, but the 161.8% Fibonacci retracement is at the price level of 16778. That's really close together, those numbers. That's not a coincidence. Math is cool. All right, so that's what this is telling us. If we get up to 100K as our major resistance up ahead, then we would expect to see it pull back down to why isn't it showing me the Ichimoku? it would pull back down to at least the 48K zone, and at the deepest, the 17K range, which brings us back to the prior support level. Which, by the way, structurally, when you look at this chart, all right, when you look at this chart, a monthly chart really tells you a lot, because if you looked at this on an hourly chart or even a daily chart and you saw, oh my gosh, look at all this resistance that was here and it broke out higher, it hasn't even retested the break yet. Now, it doesn't have to, but we would like to see that occur, but it hasn't even retested the break. All right. Not even tested it. So, I mean, having some resting buy limit orders at 20K, even like 18, 19K, that doesn't seem like such a bad idea when you look at the potential moves up ahead. It really does not, because this could really trigger a substantial letting go of weak hands and allow people to actually get in on a really nice dip, especially if you start to see a whole bunch of risk off conditions play out here. Then that's what you should be looking for. So near term support for Bitcoin, 35 to 38K. That's what we've been talking about. Major top price target is at 100K. But again, I mean, when you look at this, this hasn't even tested the break on the monthly chart. That is likely to occur. Yeah, it's weird that we haven't had it come back down to at least test half of that range to about 20K. So that's what I would assume. You get down to the 20K zone and there we go. That'll be a good zone to look at. Anyways, that does it for me. Y'all have a good rest of your day. Look forward to speaking to you tomorrow from all of us here at Exchange Rates UK. Please don't forget to like and subscribe.